to welcome right now everyone for our next session that is on the accelerating transition finance with next generation technology. And that goes hand in hand most likely as well with trusted process. We need the ecosystem. We need the resources as well. So how do we get there? Having said this, it is my pleasure right now to please join me in welcoming the moderator, Ben McQuhae, founder, Ben McQuhae from Co, and our next panelist from Diginex, XTCC 013, and BlueOnion to the stage. Okay, you prefer to go from the right. Please come here. Thank you. Thank you.
Okay, are we good to go? Okay, excellent. Well, I've already been told there's no time for Q&A, so bad luck. Which I guess also means we better get straight on with it. So I think we can rely on the very brief introductions. Everybody's name is above their heads, and all the contact details are in the speaker pack and event information. So welcome to this session. We're talking about how next-generation technology can help accelerate transition finance. Okay, so what I want us to do is really focus more on the technology and the solutions than the transition. But I think it's important just to spend a moment or two just making sure we're all on the same page, because we hear about transition, this transition, that. Transition is very much the new green. And there was a time when we sort of optimistically thought, sort of post-Paris, that we move from brown to green, and it's sort of one step, as it were. And I think we all understand now that in most cases that just isn't possible for a whole host of reasons. Okay, so transition is really, and broadly, the process by which we move from brown to green, and that's a process that delivers on net zero commitments, decarbonization commitments, whether these are at a national level, a provincial level, an economy level, corporate level, and so the list goes on. Okay, so we understand now that we need to find and deploy trillions of dollars annually. Okay, and it keeps going up, but trillions of dollars annually in order to fund the transition, which you'd think, in a financial center like Hong Kong, that's got to be easy. Brilliant, we got money, we need money, we've got it. But not so fast, because transition is complicated, okay? In order to deliver transition, then we need to produce, or rather we need investor confidence, we need lender confidence, okay? The investors and lenders need to know that the money they're deploying is indeed going to deliver climate outcomes. And in order to provide that confidence, we need frameworks, we need rules, we need taxonomies, we need reliable data. And in order to deliver on all of the above, of course, we need solutions, okay? And so today, I'm really happy, and you guys should be as well, that we have 3 leaders in green fintech who are delivering real solutions available in the market now. Okay, so the comment in the last session, they asked about real world, what's happening in the real world? Well, you're about to find out. So what I'd like to do is just really ask the same question to all 3 of you, if I may, and that is really just to sort of hand over the mic, and perhaps we can start with Elsa on the far side of the stage. Elsa, just take 5 minutes, introduce BlueOnion, explain the sort of the solution and the tools that you have developed, and if you don't mind, help us understand, what's the nature of the customers that you're serving, and how are you helping them deal with issues that or transition issues? Elsa.
Wow, so much to cover in 5 minutes. Okay. Great, BlueOnion, as the name implies, we peel the layer one layer at a time, and sometimes during the process we do make the asset managers cry, but that's the whole purpose of it, right? Because the bottom line is there are so many financial institutions including asset managers and wealth managers, giving them the benefit of the doubt. Nobody intends to lie, but when you don't know the fact, you would not be disclosing it. So the problem is the asset and wealth managers in the space, they would disclose what they know is the fact. So what BlueOnion does is we use 245 metrics to measure a corporate sustainability performances and 105 sovereign nations, sovereign metrics to understand countries, right? So the reason for that is we want to hold corporates and also sovereign nations accountable for the issues they offer to the general public. And so with that coverage, we now have about 300,000 public mutual funds and ETFs on BlueOnion, covering about 42,000 public companies. Now, private companies is a different story. But it's important for the asset managers because when they are investing, actually it's important for the entire financial ecosystem because it starts with the supply chain and then it goes to the company level. The company buys from the supply chain, the contractors, and the asset managers would buy the issues of these companies. After that, the banks will be onboarding these issues or the funds and ETFs and perhaps buy the stocks directly on the stock markets and offer it to the consumers, right? So if you put that into a food chain analogy, the growers, if they are growing it with a toxic soil, the cows eat it, whatever crops is being grown from it, and then they get slaughtered, and then they put toxic materials into the slaughtering process and make sausages out of it, and they're being shipped to the supermarkets, and the supermarkets are the banks in this case, would be onboarding these toxic materials. And we, as consumers, would be walking into the supermarkets and buying these food and feed our families with. So it's actually quite scary if you think about that. And so we wanted to address the entire process, the entire financial ecosystem, to make sure there's no tricky things is involved in the process, including the slaughtering process. So it's very important that BlueOnion takes an independent approach. We do not take information directly from the corporates. We adopt a triangulation hybrid approach where we would work with data providers because, again, putting it in a food analogy, they are the fishers. So a lot of fishers out there, they're collecting, casting the net, collecting the fish, cleaned it, hopefully ethically, cleaned it, packaged it. We buy it and we cook it with our own recipes and sometimes according to our clients' recipes. And people can just come and eat without understanding the process of fishing, right, for example. So the end of the day, we are able to manage, we are able to save approximately 80% of costs at the asset manager level, improving efficiency by about 80 to 85% because they no longer have to hire an army of analysts. They no longer have to go out and buy expensive data. A little bit, besides the point, but unfortunately, this whole sustainability process has been hijacked by people who have a commercial mind as a primary driver and hijacking the whole situation and making things extremely expensive for the tier 2 and 3 managers to afford. So, but that's a different topic. I can go on all day about that. Yeah.
I know that from experience. Okay, Lisa, if I may, just take 5 minutes if you would, and just tell us all what the great work that you're.
Sure, thanks, Ben. Professor Lisa Wilson. So, in essence, really, a lot of people ask me what I do, and I think quite simply I can say it in one line: I've changed the economics of doing the right thing. Now, that probably follows on from the very end point that Jason made beforehand, and his word was ecosystems. Because one of the things that we've recognised is to plug that gap, and it's multi-trillion, just say it's a lot of money, gap in climate finance. We can't get money from where it exists to where it's needed in an ethical way and a way that's embedded with integrity. And how do we use the technology to do that? But I can't do it on my own. And that goes to the end comment that was made, in the sense it's a team exercise. So it's an ecosystem. And one of my areas of professorship is ecosystem design thinking. So I come here with two hats on. One is as the Managing Director of XTCC Investments, which is a company that has produced the world's first green exchange tradable investment products, a suite of investment products that uses a securitized asset of high integrity carbon credits. Now, in essence, structured products have been around for 50, 60, probably 80, nearly 100 years, I don't know, a long time. But it is the traditional capital market. So we went out to the traditional capital market and said, well, you've got the money that we require, how do we get it to where we need it? Rather than saying to them, here's what we've got, are you interested? We actually took a different approach. So being structuring experts, we went, well, we can actually utilise high integrity, and I do stress that word high integrity, and I'll talk about that in a minute. We can create and structure financial products to suit investors' needs, list them on stock exchanges, give investors the confidence that they require to invest in a financial instrument that they're used to investing in, and therefore unlock traditional capital markets, including Sharia-compliant products. So we have a Sharia-compliant and a conventional product. And we released that just before COP28. But I recognise that we couldn't do that on its own, because to give investors confidence in that securitised asset, we also needed to have an infrastructure platform that connected the fragmented and dysfunctional carbon market, but also connected the hub and spoke model, if you like, because we've got traditional markets, we've got registries, we've got projects, we've got digital assets, we've got non-digital assets. It's a real mess, in other words, to try and connect. And so I partnered with 013. Now, that's my other hat that I'm here as a strategic advisor to 013. You heard Benedict this morning speak about the tech sprint at COP28. Well, 013 won that tech sprint for the world's best blockchain solution to scale climate markets. And one of the other winners is out here is Intenzel, which won it for the AI. So I think that's pretty profound that we're both here having these conversations. So we were the world's first using the world's best technology. And what we recognised is that 013 was our connector. It was the way that we could get money. Once we get money from the traditional capital markets, we could disseminate those monies right back to a community project level with ease, because most people have no concept that you might have traditional money coming from the Deutsche Börse stock exchange, but how on earth are you going to get that into the global south and emerging nations and deliver that at root source where the carbon credits are produced? And there are many blockages and obstructions along the way. So the ecosystem is making all the stakeholder parts of that ecosystem work efficiently, fairly, transparently, and immutably work. So, of course, it is blockchain enabled. So changing the economics of doing the right thing is not just about one product, if you like, the end product. And I often talked about, and I spoke about this at lunchtime to a number of people, that whilst we acknowledge the intent and the motivation of investors is always going to be different. You will get investors that simply want to invest and make lots of money, and they quite honestly could not care about climate change. You will get investors that really do care about climate change, and you'll get companies that want to invest to offset their emissions and so forth. But for us, the end result is that money is unlocked and gets it to where we need it to be. We need to fill that climate gap, and we need to fill it very quickly. So I think that sort of gives you, in a very broad sense, what we do. I think one of the most profound things we've done, though, is by creating that ecosystem. When we were at Davos in 2024, early January, for the World Economic Forum, we were the 5th biggest announcement for sustainable business, because we made a public call to action for $100 billion to come through that ecosystem before WEF25, and we're well on our way. So we're really pretty proud of that in a very short period of time.
As you should be. Mark.
Hello, everyone. My name is Mark Blick. I'm CEO at Diginex. We're a Hong Kong headquartered and founded company right here in Cyberport. We started in 2020 originally as a young founder who wanted to grow up and be just like Palantir. We built government software platforms for supply chain transparency. We didn't have $30 million of Peter Thiel's seed money behind us or the CIA's venture fund InQtel. So we moved towards building our own products. We've built two products, one together with Coca-Cola and Unilever, looking at supply chain transparency, particularly around the human aspect that looks at human rights due diligence, forced labor risk, child labor risk, and gender risk, and goes deep into thousands and thousands of suppliers with many now multinational companies, and looking to automate that process and really improve upon what we all know to be kabuki theater of the current social governance audit process, which is, I'm coming next Thursday, get everything ready, I'll do an audit. And so you turn on the air conditioning just before the auditor arrives, and you turn it off the minute that they leave. So looking to enhance that process. The second product that we have, Diginex ESG, which I think most folks here will be familiar with, and if you're not, you can go to our website. It's a 7-day free trial. You can access it. You can use it as much as you want for 7 days. Focuses on ESG reporting, particularly for small and mid-caps. And folks have heard me talk a lot about the grumpy CFO demographic. This is now live in 55 countries around the world. It's also been adopted by major commercial banks with a specific focus on those small to mid-cap enterprises who are very early on in their ESG reporting journey, who may or may not want to do this in the first place. People hear me talk about ESG being more around earnings, survival, and growth, and being able to position it in that way that allows you to win more customers, allows you to get access to cheaper forms of capital, and ultimately to grow as a company. So we built that product. We launched it in 2020, and then as we became well known as a software company that really just focused on the accessibility, the affordability, and the scalability of a software product for companies of all sizes, where they could complete the process by themselves, with removing the need for external consultative intervention. We started to be adopted by much larger institutions who didn't need it for themselves. They needed the expensive consultants to come and help them do that. But they needed a software platform which they could scale without the need for lots of people to do so, with their own ecosystem of SMEs. And that's where we're really focused on now. And that's now, as I mentioned, in 55 countries around the world, and we're continuing to grow that.
Thank you so much. So we've heard about from Elsa. You mentioned sort of accountability, efficiency. Lisa, you mentioned sort of changing the economics of doing the right thing and unlocking capital. Mark, transparency, affordability, accessibility. If we can sort of switch gears slightly onto the tech, because we're in Cyberport and we're not allowed out unless we talk about tech. We hear an awful lot now, and as was remarked on in the previous panel, you know, where we're surrounded by AI and Web3. Help us understand, if you would, the sort of the tech that's being deployed now in the delivery of your solutions, and where we are with regards to the sort of the emergence of tech. Let's just go in reverse order if we can, Mark.
So a favorite quote of mine is, if it's in Python, it's machine learning. If it's in PowerPoint, it's AI. I think that applies broadly. I think, personally, that technology is a secondary to what your overall principle and goal is. Our principle for Diginex ESG is to be accessible, affordable, and scalable. The average customer, when they buy a car, they don't really care so much what is inside the engine. They care about, will it get me from A to B? Will it do it within my budget? And can I do it often and repeatedly without it breaking? Some do, open the hood and take a look and dig around, but I don't know what, 99%, 90% care about that. So everything that we do for Diginex ESG is through that lens of every technology we use must make this more affordable, must make it more accessible, and must make it more scalable. So I'll give you an example in that context. I think everybody in this room understands materiality assessments and how people go about that. So we looked at the journey of companies, and it was really difficult as a grumpy CFO of a company going about this, and you didn't really understand the language, because instead of saying your utility bill, people said indirect scope 2 gases and metric CO2 tons. And so getting confused by this language, going through that process, feeling intimidated, anxious, and insecure, these emotions that we see with companies a lot. They don't want to get it wrong, and they don't want to look stupid. and so they withdraw from the process. So how do we make this a lot easier for them? One of the first things that we built, this was back in 2020, was we took 77 different industries, we mapped them against every variation of material topic. We then uploaded hundreds of thousands of historical materiality assessments to make sure, to build a recommendation engine. We worked with SASB license, GRI license, and IFRS license. They've all been through our recommendations to make sure that it works. And now every single time a company onboards onto our platform, we use the results of their materiality assessments to relearn the engine. So the onboarding process, which takes about 60 seconds, automatically generates a materiality assessment. And that for us was really core on being, it's affordable, it's accessible, and scalable, because you can do it over and over again. On Diginex Lumen, it's a more complex tool. We look at more deeper algorithm models. But again, it's what are the overall driving principles of the product, and then the technology should fold in underneath that. Blockchain we use for an audit trail, and that is important for us, but that's because it makes it more accessible and affordable and scalable for all of our clients.
I mean, to what extent, just as a follow-on question, to what extent in your, I suppose, pursuit of accessibility and scalability, to what extent do your sort of customers need to be sort of tech savvy do they need to understand what's sort of under the hood, as it were?
Absolutely not, or it's not scalable. It needs to be able to be, I mean, I don't know whether there are any Americans in the audience, but if you are, or you've had the misfortune of doing tax reporting in the US, and we've all seen through films and stuff, it's unpleasant, it's difficult, and they know the answer, but they make you go through an exercise where you have to work it out by yourself anyway. And then along came TurboTax. And they made it possible that your grandmother could turn up the day before filings were due, having not done any homework, and still get everything submitted on time. So for us, it was really important that the grumpy CFO that didn't understand technology, that probably just wants to use Excel and Outlook, that doesn't understand all these fancy terms, is able to complete the process. That is really important. I was at a conference the other day, and there was a regulator who was speaking very proudly about the new disclosure requirements that were exceptionally detailed and granular, which defeats the purpose, because there's only 5% of companies that have the internal staff who understand what those exceptionally detailed, granular guidance recommendations are for. For us, if we can't explain it on a one-pager or two-pager, it's not scalable.
Lisa, would you concur?
100%, and I'll build on that. I think one of the key themes I had when I presented at COP and WEF was clarity of voice. 100% I'm a passionate believer in tech, and I can get right down to the geeky stuff, and I've got patents in blockchain and all that sort of stuff. But that's the under the hood stuff that we might have a chat about and think that's great. But 99% of the world just don't get it. And I think, the topic of this particular session is accelerating transition. For us to accelerate transition, we've actually got to stop talking about the technical side of the technology and start only talking about what it will do for you, but more importantly, that the technology exists. And I think that's an important part. Obviously we use blockchain, we're using IoT, and we'll continue to do all of those things, but we also use infrastructures, other infrastructures. We talk about hybrid technologies. We connect the legacy systems to new systems. Nobody talks about that. It's great to have all this great technology, but walk up to most financial institutions, they're still using mainframes. So we need to be talking about for us to accelerate, we need to be talking about how can we help you adopt and implement these technologies, and what will they do for you? You don't go out and buy an iPhone and go and question Apple on how it's been produced. I still look at it fascinated, and I still have no idea pretty much how it works. So I think, yes, we're using incredible technologies. We'll continue to do so. It's important when we develop and build and implement technologies, we talk about cybersecurity, and because the more digitised we're becoming, the more secure we need to become. Blockchain, for me, in fact, to be honest, the very reason I got into the role, or the roles that I'm in at the moment, is that I got really tired and burnt out of trying to educate people about the wonders and the joys of blockchain. I decided, actually, I'm just going to go out and show them. I'm going to show them what an end-to-end solution that utilises these technologies and the amazing things it can do in a simple way. And for example, Carbon-Base, who I'm also a strategic advisor, who's actually nurtured here in Cyberport, is using an NFT technology, which is a perfect use case for a carbon credit. For our ecosystem, that's extraordinary, because for the first time we'll actually be able to have end-to-end provenance right from the very source, and we'll actually have a beautiful little package that we can move around and have perfect provenance on. But if I had to explain to you how an NFT worked or how it was created, it would be irrelevant. What you want to know is what will it do for me? So I think in terms of accelerating the transition and accelerating the use of these technologies, we have to have far more conversations on ecosystems and how obstructions can be overcome, right? So I was talking to somebody this morning that talked about literally the green bond and getting finances and stuff out there. And I said, well, actually, did you know there's one big challenge that you haven't solved in the corporate world is that those monies have to get to those projects, which I spoke about before. And there's a little thing like KYC and AML. And you've now turned a carbon credit registry into a money-regulated entity. And they therefore have to pass financial regulatory KYC and AML, but that's not what their purpose is. So what do we do to overcome that? Well, we can use technology, we'll use a digital exchange, and we'll use other methods to get the money to where we need to go. So I think technology is really just the enabler. It exists. Because let's face it, blockchain and AI are fundamental technologies of the 21st century. Well, I've got news for you. We're a quarter of the way through it. It's 25 years. It's not nascent. It's not new. It's stock standard. So financial institutions and corporates who are only just starting to talk about using it for tokenisation, get with the plan. The train has left the station well and truly. We're talking about implementation now. Very different conversation.
Well, that's good. So I'll stop trying to understand it and wait for the next...
Give up.
The next version. Yep. Great. Thank you. Elsa, I mean, I just want to give you the opportunity to sort of remark on what Mark and Lisa have shared, but also I want to throw you another question. This session is sort of supposed to be about, how emerging technology or next generation technology sort of can accelerate transition finance. But my question is, are we doing enough in Hong Kong to accelerate next generation technology?
Ben, I wish you didn't ask me that question.
I can see see the timekeeper getting very nervous.
Yeah, I knew you want to entertain your audience. That's why you asked me that question. But let me echo to what Mark and Lisa just mentioned. I totally agree with everything. By the way, I think Mark is overly humble. You're another poster child of Hong Kong to me. So I think it's all about accelerating transition, okay? It's not about well, it is about the technology, and it's here to stay. And it's going to be Web 4, 5, 6, 7, and 8. And I'm not going to be around to see that. But it's going to be very fast. But the whole point about this whole summit or the Green Week is about accelerating the transition, right? We want to accelerate because there's been too many talks, and there's not enough doing, all right? So whatever the technology is, it has to enable the transition to be faster. So for example, I think one of the contribution there would be the blockchain tokenization of these assets that are supposed to be a privilege of the institutional investors, right? Then now they can be tokenized. The smaller investors can get their hands on it through the digital units, and there's a lot of transparencies there. And DeFi would definitely enable P2P lending, right, for example. So these things would need a lot of support from the governments. Unfortunately, that brings it to the next question. Is Hong Kong doing enough? Not nearly enough, right? Unfortunately, King has left. I know probably he knew I was coming up, so he just ran. Yes, the government is trying, and I hope that they are. Again, I'm hearing a lot of talks, right? If this is recorded, yeah, by all means, just show it to King. I'm saying the same thing over and over again. There's not enough acceleration. There's not enough trust with the startups. Like, Mark and I, we didn't come from a wealthy family. We didn't have a bucket of, seed capital sitting in front of us and trying to figure out what we want to do. But it has to come from people with the right ethics and the right heart. And it's a hard sell, Lisa, unfortunately. I've tried that for years, and people thought I was preaching a cult, right, when you're talking about ethics or integrity. So at the end of the day, yes, unfortunately, we have to plead to the greed side of what people are doing, and hopefully in the process make them do some good. And then hopefully they'll be converted one day, but they may not, most likely not. So what we're trying to do here is we're going to try to look at, first of all, expediting the process for asset managers to invest ethically, responsibly, and allowing the asset owners to practice responsible capitalism. So fortunately, there are some very nice frameworks like the EU SFDRs. I think it's quantifiable, it's easier to understand. So the question about how we can accelerate and tap into the retail capital, for the retail public, aside from the DeFi and the tokenization of these assets that the retail investors can try to get access to. But Hong Kong is still very conservative, right? One platforms we know, they only wanted to invite the accredited investors and sophisticated investors to participate at this moment. And hopefully that will change, but that's not helping, right? It's going to go back going back to square one. And so I think technology is an enabler, right? By us improving the efficiency to immediately see whether a fund is light green, green, dark green, and what we call a dark green 50 by measuring the revenue contribution in green, will enable and accelerate that process so that the practitioners don't have to waste a lot of resources going through Excels, right? I mean, that's already a big leap from Excel to Web3, right? What technology are we talking about, right? So people are still practicing Excels before they see our solution. So it's already a big leap. And there's still a lot of old technology out there. But for sure, we're accelerating. And look at the stock prices of NVIDIA. It's here to stay.
Yeah, sure. Well, I actually look and see what sort of our own regulators have been saying, and whereas sort of 3 or 6 months ago, they really weren't saying very much when it comes to sort of green tech, green fintech, digital assets, digital security, tokenized securities, etc. All of a sudden, it seems to be very much en vogue. And I think there's always a tendency to assume that sort of positive signaling sort of equates to real action. And I think, a couple of takeaways I want everyone to sort of leave here with today is that noise or words are just that, okay? We're here to deliver action. And another takeaway is the fact that, there's almost like a working assumption now that the solutions to tackling climate change rely on sort of innovations and technologies that don't yet exist. And whilst to an extent that might be true, certainly for sort of the acceleration and scale, there are solutions that exist right here, right now, that are available in the market right here, right now, and all of our speakers today represent their, solutions and prove that point. So with just moving on a little bit, if I may, Professor Wilson, you mentioned in your last remarks a little bit about regulation, which you may or may not know because we don't know each other that well yet, but that's one of my favorite subjects. To what extent, I mean, from your perspective in the markets in which you're active, to what extent does or can regulation sort of help and support I'm not sure if it's on the technology, acceleration of technology or the adoption of solutions?
I'm going to twist the question a little bit because first of all, we can never get rid of regulation, and it certainly becomes part of innovation. And if I just talk about the innovation curve, it's getting sharper and shorter, and it's getting quicker and quicker that regulators do get involved. And that's actually a good thing, but it's also a bad thing in another way, and this is where the technology part comes in. So at lunchtime, when I was talking about ESG, for example, how can we utilise technology to enable the regulatory framework to be easier for the 96% of the economy, which are in fact SMEs? The corporates, I'm sorry, but they're always the spoken about bit, that 4%. Let's talk about the very vast majority of the economy. So if we talk about ESG, and we've been talking about that all day, the very vast majority of them will not have any iota of capacity or ability to report on ESG, because there are hundreds of different regulations around the world. Now, if we talk about financial reporting standards, I work with the European Commission and SocGen in terms of their common domain model for producing an ability for, in essence, corporates to be able to participate and report on their financial reporting standards, IFRS. And there is a common domain model that was produced to make it easier. So in other words, all the different regulations around the world have been dumped into one big melting pot. Blockchain enabled makes it super easy, AI enabled as well, so that if I'm a corporate, I plug my question in and it produces the data that I require. They approached me and said, well, Lisa, how can we do that with ESG? Because there's hundreds of those. I did a couple of presentations and said, well, there's hundreds of those too. Which one do you want me to talk about? Because there's hundreds. How about we do the same thing? Because the technology exists, but the intent, the drive and the motivation doesn't. And this is where Hong Kong could lead the way because, and I was having this conversation at lunchtime, that project needs funding, but it is a game-changing funding mechanism because every single, if you just talk about Europe alone, by 2026, every single listed SME, plus every SME that turns over 150 million, and even if you don't or are not registered in the European Union, but you work in the European market, you will have to report ESG. There currently is no way for that to occur. We're less than 2 years from that. The first thing we do need is a common domain model, and technology can enable that. So regulatory frameworks is one conversation, but if we don't make those regulatory frameworks utilisable and user-friendly, they're of no use to anyone except for the corporates because they've got a whole department that can use them. I believe in regulation, provided it is easy and simple and not just a cost mechanism that's burdened by SMEs, and one that, as you said quite rightly, is difficult to understand.
Smart regulation.
Smart regulations.
Great. I want to just sort of give Mark the last couple of minutes, and Mark, and of course, feel free to sort of remark on Elsa and Professor Wilson's comments. But if you can, I'm assuming that Hong Kong's not alone in that. I'm assuming most, if not all, self-respecting sort of international financial centres and tech hubs are looking to develop their own, very broadly, ESG, sustainability, transition, etc. solutions. So to what extent are these solutions transferable across markets?
Well, I can see the clock, so I'll speak quickly. And to add on to Elsa's point on Hong Kong, I think that I break it down in relative to before. We're seeing a lot of signalling, which is great, and it gives information to the market. I'd say relative to other jurisdictions who are also looking at this, it's quite far behind in terms of risk tolerance. We're a very proud Hong Kong company. We're founded here, headquartered here, thanks to Victor and Cyberport. When we go and visit our other jurisdictions, the speed to conversation, to funding, to deployment, and the risk appetite is exponentially greater than we currently see here. And we see that around the world. And I think that the reports and the surveys and the papers are great, but there needs to be a connection between funding and deployment. And I think previous panel mentioned the ecosystem, the encouragement between the startup, the funding, and then the conglomerates within that jurisdiction to deploy the solution. And it happens awfully fast in other jurisdictions. And I think that needs to be replicated here in order to allow startups to be able to grow quickly and compete with startups who are doing exactly that and getting scale in other areas. That's follow on to Elsa, and the follow on to Lisa would be, I think the European regulation is great. Something that I've said a lot is that we're suddenly asking the million procurement professionals around the world who throughout, let's call them Bob and Mary are excellent professionals in procurement, and they've always evaluated products on quality and price, probably more to do with price and quality. But we're suddenly asking that they also become experts in biodiversity risk and human rights risk and climate risks, and Bob and Mary simply don't have those skill sets. And not only that, we're assuming that the companies have the internal knowledge to be able to report on those new disclosures. And even if they don't, we're assuming there's some watchdog out there that will be able to judge whether the company is meeting the disclosures that suddenly they have to live up to. And there simply isn't enough of skill set and expertise to fill any one of those buckets. So the worry that I have, the concern that I have is, will people just begin to shrug their shoulders and say, well, I can't do this, so I won't do this, and even if I don't do this, I'm not going to get in trouble because no one's watching. And maybe they'll catch up in 5 to 10, 15 years. But in 2 years, for sure, there aren't enough sustainability consultants in the world to meet the demand that's been generated by companies to report on it. And with all the, I don't know how many gigabytes of data that is going to generate, how people are going to evaluate whether companies are meeting those requirements and what the consequences will be if they don't. And hopefully this is where technology can help with some of it, but I think it's a very accelerated timeline unless we deploy very quickly.
Great. Well, with that, and I think, you know, we need honest appraisals, because we don't need to be told, you know, we don't need to be told that sort of everything's rosy. We know we've got our work cut out, and here, you know, we're super privileged to be able to hear from 3 green fintech heroes of mine, and should be of yours as well. So Elsa, Professor Wilson, Mark, thank you so much for joining us. Anton, please invite us back next year, because we should have an update on what progress we've made, not just with their solutions, but also within the sort of the broader regulatory framework, infrastructure, etc. Great, thank you so much.
Thank you.
Thank you so much. Thank you. This was a really eye-opening discussion, conversation. Thank you, Ben.